In 2008, Ray Dalio foresaw a catastrophe. Then he claimed the COVID epidemic would cripple the U.S. economy for years. Bridgewater Associates founder and 72-year-old billionaire investor Ray Dalio urged you to be prepared with another economic crisis looming. The threat of war with China may have triggered this economic crisis, which he blames miscommunication. And Dalio admits he's been incorrect before. However, he believes future calamities are unavoidable based on historical trends. That is, if the imminent US-China confrontation does not destroy the economy, something else would. Here are his top 2 financial tips and why he feels disaster is imminent. Why Dalio thinks the US-China trade war will worsen. If you are new to our YouTube channel, please subscribe and click the notification bell to avoid missing new content. Bridgewater Association will regularly add videos to keep you updated on the latest in business and finance. A financial disaster is coming, says Ray Dalio. The book, Principles for Dealing with a Changing World Order by Ray Dalio, warns that American efforts to reform China's culture may result in a collision. This might intensify the US-China trade war, which began in 2018 and has resulted in salary cuts, reduced business profits, and higher consumer prices. According to Moody's Analytics, the trade war lost Americans jobs in its first year. According to the Federal Reserve Bank, the trade war has cost American firms $1.7 trillion. Dalio's recent remarks towards China sparked debate, following his recent CNBC interview in which he compared China's human rights practices to those of a strict father. He defended his words in a LinkedIn blog. He wished that the US and China could avoid a confrontation. The business cycle is in danger. The capital market cycle is the primary driver of economic ups and downs, with significant ramifications for domestic and international politics and warfare. The dollar's commitments are far too substantial and rising too fast to be fulfilled in genuine money. In other words, because these currencies' debt is an overhang, money will be provided to service it, and debt growth and interest rates will be kept below inflation and economic or income growth. A late capital market economic cycle means wealth will almost likely to be transferred from the wealthy to the poor. While the accuracy of these claims may vary by country, they are nearly undoubtedly universal. As a result, the currency worth of money issue is the most severe long-term concern. Having the power to generate money to service debts shifts risk away from borrowers and creditors. The real danger is that creditors will keep depreciating assets, for example, return on loan assets less than inflation. I believe a significant wealth transfer from creditors to debtors is imminent for the same reasons. The rate of loss of reserve currency is lower than other strong indications. There is a strong desire to preserve reserve currencies even when their fundamentals no longer justify their existence, until it becomes evident that debt in cash is a horrible idea. Because the currency depreciation rate exceeds the interest rate provided to loan holders, net losses encourage selling, which results in more significant losses. The Dutch guilder and the British pound also plummeted sharply after geopolitical crisis defeats during periods of heavy debt. Creditors learned their fundamentals were worse than expected, and the interest rate couldn't make up for it. My short-term leading indicators accurately predict when these type of slide will occur. While my top long-term indications are just slightly correct, it is simple to assess a country's economic health by comparing its assets to liabilities, determining whether its obligations are in local or foreign currency, and who is funding them. Given that these are all long-term indicators, identifying at-risk countries and currencies is simple. Predicting the start of the significant drop is more challenging. Ray Dalio did not miss to leave advice to young generation investors. His first piece of advice is to conduct a risk assessment of your financial situation. Whatever happens, Dalio's approach to future events is straightforward. He asserts that anxiety forces you to examine your own unique hazards and encourages you to take action. For instance, the physical location of your home and workplace may pose a risk. Dalio includes a health index in his book, which ranks a dozen countries on 18 criteria, including debt burdens, military strength, and economic performance. According to Forbes, he intends to create a website that features real-time data to assist readers in analyzing risk and developing plans for where to live and invest. While relocation is cumbersome, Dalio feels it is worthwhile in financially vulnerable situations. He advised calculating financial risk in inflation-adjusted terms rather than in current money. For example, if you have cash in a savings account, it is likely to increase slower than the rest of your investments due to inflation taxation. However, this does not mean that you should put other assets ahead of a savings account or vice versa. According to Dalio, you need a steady, well-diversified portfolio to support your emergency funds in tumultuous times. His second piece of advice is to make prudent financial decisions and diversify your possessions. According to Dalio, the first step in developing a robust portfolio is to examine your current investing strategy to calculate how many weeks you might financially live if you lost your job. He said it is always prudent to determine the worst-case scenario and prepare for it. Then verify to ensure that none of your money is concentrated in one location. Cash is not a safe investment, Dalio remarked last week on CNBC as inflation reached a 31-year high in the United States. Rather than that, he recommended investors on Friday diversify their portfolios as much as possible, embracing everything from inflation index bonds to physical assets such as gold. Cryptocurrencies, for example, may be included in your portfolio. Dalio confessed to CoinDesk in May that he owned a small quantity of Bitcoin despite his years of criticism. According to Dalio, this is a hedging bet made only for the purpose of diversity. Please share and like this content and let us know what you think by typing your comments below. Keep your notifications open, and I'll see you on our next video.